Hello and welcome to this week's special presentation. My name is Jim Penna. I'm the manager of retirement services here at VectorVest, and I'm very happy to be providing this week's topic, which is titled Transform Your Retirement Portfolio. I start in the spirit of the current Olympics that are winding down from a quote from Mr. Warren Buffett, where he said, "The interesting thing about investing, it's not like the Olympics. You don't get any extra points for the fact that something's very hard to do. So you might as well just step over 1-foot bars instead of trying to jump over 7-foot bars." And I thought it was a great way to begin this presentation because my goal here is to show you that you can take control of your retirement portfolio and transform your retirement planning easier than you think. We do it with the VectorVest 3 P's investing model. The first P is profit. When you think of profit, you can also think of the word growth or capital appreciation. Our strategy here is a plan to grow your portfolio safely and steadily each year. The second P is provide. When you think of provide, think of providing income, a safe, steady flow, and a way to generate a consistent income. And then finally, and in my opinion, the most important P is to preserve or protect your net worth, your retirement nest egg. So when you think of preserve, think of it as a protection plan or insurance for your retirement portfolio. When you apply these 3 P's, what we look for and what our goal is, of course, is to retire with peace of mind. And the transformation takes place beginning with the 3 P's. So we'll start with profit. Instead of having that roller coaster ride that you may be experiencing where your wheels are just spinning as the market goes up and down. Okay, I know that no portfolio or no stock goes straight up. But what we'll do is transform your portfolio from that violent roller coaster ride to a much more steadier climb. Next, we'll talk about providing income. Instead of that random dividend stock that you might have and a couple of bucks coming in here or there, just trickling in, we're going to transform that portion of your portfolio to a steady, safe, consistent income flow. And then finally, we'll transform your portfolio by going from being unprepared and not knowing what to do when the market turns against you to being fully prepared and understanding how to recognize those moments when a strategic defense mechanism needs to be put into place to protect your portfolio. And it is, like I say, easier than you think. And I've waited almost 15 years to get a Jackson Brown quote into one of my special presentations, but he wrote, take it easy, don't let the sound of your own wheels drive you crazy. And so that is my goal here tonight, to show you exactly how you can take control and transform your retirement portfolio. And I'm going to start by coming into the VectorVest program and walking through the process here. And as always, with any type of investing, it all begins on the home page with recognizing the market trends. Now, for our purposes in a retirement-minded portfolio, we're always looking at the longer-term trends for in this case, the confirmed down call. Right? We're going to begin to build our portfolios of both growth and dividend growth portfolios only when the confirmed up call is there. So that's pretty basic when it comes to building your portfolio. But the color guard and the market timing graph are also extremely important when it comes to managing your retirement portfolio. So we're going to also use that to know when to recognize the strategic times that we need to be protective in our portfolio. And if I bring in a quick graph of the market timing graph, this is the VectorVest composite. I have a 1-year look at the VectorVest composite price. And if I put our confirmed calls up here, it's just one quick, easy example to be able to recognize when it's time to be defensive. So the same time we recognize when to buy, right? The VectorVest mantra is know when to buy, what to buy, and when to sell. Right? We have that on both sides. So the market timing indicators, especially the confirmed calls, are key to our success in managing our retirement portfolio. This confirmed down call came on November 22nd, 2021. That would have been an awfully nice time to be able to insure your portfolio simply buying put options on the SPY or any major index at that time. So from here, I want to start with a growth portfolio. What I'd like to do is start with first the results. So if I go to the main toolbar and I take us into my portfolios, I have here a series of portfolios that we build and manage through our retirement coaching group, and I'm going to start with the retirement growth portfolio. So I'm going to begin with the results first. So this retirement growth portfolio is currently in cash. It's a 5-year-old portfolio, began as a back test, and somewhere around this time was then created into a portfolio. And so you can see there's a 205% gain over the last 5 years. It began in January of 2017. That's over 40% annualized rate of return. And that doesn't include any dividends we might have gotten along the way. And it also doesn't include any of the offsets by being strategic and buying defensive puts, protective puts when the markets were turning against us. We are currently in cash in this current portfolio because the investment technique, the risk management techniques, keeps us out of this long drawdown now that we've been in since back in November of 2021. So while many investors who don't have a plan still have positions and are still concerned and staying up at night because of the market conditions that we're facing right now, don't have that peace of mind knowing that their nest egg is protected, and we'll wait till the confirmed up call comes again and we'll simply replenish the portfolio. Which leads me to the next portion of the growth portfolio. How do you find the right stocks? You've heard me talk about relative safety many times. Many of us here at VectorVest talk about relative safety. Let me go into the Unisearch tool and share with you the search. My favorite search to find safe stocks is in the prudent folder, and the search is called ruler stocks. Now the ruler stocks have a sort. We sort the stocks by relative safety times the earnings growth rate. Just to make the list, that growth rate has to be greater than or equal to 14% per year, and the relative safety number on a 0 to 2 scale has to be at least 1.4 just to make the list. So if I run this search in real time, we'll see the type of stocks that come to the top of the list. If I slide over here, we can see the VectorVest analysis of these stocks. Now, given where we are in the market, it's a confirmed down, and I certainly wouldn't be building my portfolio now, but this is where you would come to find these good quality, high relative safety stocks. So it's very easy to find these stocks. Ruler stocks is a great way to begin that search. In fact, I'd like to walk through a quick exercise that I like to illustrate the power of relative safety and how important it is to know what type of stocks to buy for the retirement-minded investor. And so to do that, I'm going to go to the Viewers tab, and I have here a watch list that I've created. Okay, it's not really a random watch list. It's 40 stocks that are created because these are stocks you're familiar with, where you shop, where you eat, where you do many things, right? Many of these companies we've all, contributed to their bottom line at some point, I'm sure. So this list of 40 stocks is currently sorted by relative safety. I have it sorted by relative safety descending with the very best relative safety stocks at the top. So again, Google, Home Depot, Lowe's, Microsoft, all places we're very familiar with and have spent money at. The exercise I like to do is to show you how you can sort within, whether it's a search or within a watch list, and how you can build that confidence in relative safety. So what I'm going to do is click on the relative safety tab here along the headers, and what I've done now is sorted this list of 40 very well-known recognizable stocks with the lowest RS coming to the top of the list. Okay. The next thing I want to do is perform a quick test. So I'm going to take this back to a date that is just a date that I've been using for portfolios and back tests. There's no real reason to worry about the date. It's just a 3-year span where the market's been up very nicely, it's been down, been sideways, and so it's a good representation. So when I run that search, what I'm looking at are the 40 stocks with the lowest relative safety numbers at the top of the list. If I go ahead and I run a quick test of the top 10 stocks here, what we find is that I have 7 winners, 3 losers, and a 43% return, which, listen, isn't bad. It's positive, right, over a 3-year span. But when we compare it to the S&P 500, you can see that it's just barely half of what the S&P 500 did over that same time frame. Remember, this is no market timing indicators on here, no risk management techniques. It's just point A to point B. Now, what I'd like to do then is resort the relative safety column and bring the very best relative safety numbers to the top and run the same quick test over the same time frame. And here you see that the average is right at the S&P 500. Again, no management techniques, no buying protective puts or managing them through downtrending markets as we would have, as we saw we're currently in cash. Okay, so that's the power of relative safety. And in fact, you wouldn't narrow it down to these 40 stocks, right? If I go back into the stock viewer, what I can do is show you that if I run these top stocks from that same date, right now I'm looking at a much larger roster of stocks. If I go back to that January date and I sort the entire database, at that time we were tracking just about 6,700 stocks. Okay, that's what the list looked like that day. What if I quick test those top 10 from beginning to end here? See, now we begin to outpace the S&P 500, and this is where we begin to see the difference. And again, that's no money management technique, so we do much better than that. As I showed in the portfolios, where our retirement growth portfolio is averaging over a 40% annualized rate of return over the last 5 years. The next P in the VectorVest 3 Ps retirement investing system is all about dividend growth. So I'll go ahead and choose our dividend growth portfolio, and as you can see, this is a portfolio that holds 10 stocks when it's fully invested. Currently we're down to 5 positions here. The portfolio is up 100 and I'm going to call it 181%. This is a little bit longer term. I like to look at the dividend portfolios over a longer stretch of time, understanding it is a longer term outlook that we use. So what we're looking at is an 8-year span, 181% gain, and understand what this doesn't include are the actual dividend payouts, which are now pushing close to $60,000 in dividend payouts over those 8 years. So take that 181%, add another 60,000 to it, that's over 240% return. And that doesn't even include the ability to reinvest those dividends if you choose to. So early on I said I would show you how to easily prepare and build and transform your retirement portfolio. I'm going to use the dividend growth portfolio to show you just how easy it is to be prepared for the next confirmed up call. So what I'm going to do is go ahead and click on my portfolios. Right, when I go up to the actual tab and click my portfolios, it takes me into this screen and it allows me to create a portfolio. I'm going to go ahead and call this, it's going to stand for blue chip dividend payers. That's the search that we use. I'm going to use a theoretical $100,000 portfolio. You can put whatever commission. Most brokerages now don't charge you a commission, so I'll leave none on there. You can determine if you want to use margin or interest or not. Put any description that you choose to put here and just simply click OK. Now that my portfolio is built, I can come over to the Edit tab and I can select an existing trading system. And within our trading system viewer, all you need to do is click on the Market Timing tab. It will sort them by the market timing. Since we only use confirmed calls, it's the easiest way to get this here. There's a search or a strategy system that says blue chip dividend payers. Click that and select. The system uses the profit locker stop criteria. It maintains 10 positions and it replaces those closed positions and it invests average value of portfolio. You can actually manage the trade within the Genius in real time, and I like to check them throughout market hours. I simply then click Save. And what I've done now is prepared myself for the next confirmed up. The Genius knows that we're in a confirmed down call, and what will happen is that the morning after the next confirmed call to the upside, this system will be put into place. So if you're looking to create a dividend growth portfolio, I just showed you how easy it is to do within the VectorVest program. Okay, these are the details of the trading system. Okay, and it's built right in. We do the same thing with growth. For that one, we actually use the Profit Locker Pro. But these are the ways. These are very easy ways to go ahead and do that, and we do it with ruler stocks as well. And finally, I want to talk about capital preservation. Now, I mentioned earlier when we looked at the market timing graph that we have many short, intermediate, long-term indicators that we can use to be prepared. The line in the sand that I like to use is the DEW. Every once in a while, the confirm call actually comes before the DEW to the downside. So in this case, the DEW came on November 26th of 2021, where the confirm call came on November 22nd. It's kind of a rare occurrence, but it does happen. So either one of those indicators is, whichever one comes first, is our line in the sand of when to become defensive. And what I'd like to do is share with you one of our retirement accounts, again, that we manage in our retirement coaching group every Tuesday. Now this portfolio, just like our ruler stock portfolio, our growth portfolio, is in cash. It began as a $50,000 portfolio, opened with Ally Invest here, and it began on September the 3rd of 2021. Now I've calculated this gain here, and we're currently in cash. I've calculated the gain at 54,608 is about a 10.96% return on investment over that time frame. I'm going to go ahead and round it up to 11%. Okay, 11% return. We're currently in cash. One of the ways we're able to do that is to not only have our positions in with our risk management techniques in place, but we also have the ability to buy protective puts. And you can see, I'm not going to go through each and every trade, but we're able to profit in those downtrending markets by buying either an SPY put option. Generally we buy them at the money, and then sometimes we will go out and do actually a bear put spread, a debit spread, where we can lower that cost a little bit. But I just wanted to walk through to show you the activity here. So aside from, and this was a 5-stock portfolio, so we would buy and sell our stocks based on our risk management technique, but we also were in there when the time called for it to buy protective puts. And this is what we've been able to do. And so it helps to mitigate the drawdown, not always dollar for dollar. And sometimes these insurance policies, actually, we end up not needing them, right? Because the market will find a consolidation and actually move up. But think of it as insurance, right? The old saying is, it's better to have it and not need it than to need it and not have it, right? It's the cost of doing business. So over this time frame, because we were able to go out and manage the portfolio, and again, this just began September the 3rd, and we're up again close to 11% already. I'm going to go ahead and finish out by going back to the Viewers tab into our stock viewer, and if I change my date here and take it back up to September the 3rd, that was the morning after the confirmed up. That's where our portfolio would have populated. So I come back here, I'm going to put this SPY up, and I'm going to run a quick test as I did earlier, right, and show you that as we speak, the S&P 500 is down over 3.5%, and we're up 11%. We sleep better at night because we're not part of the chaos that we see here. And by looking at that 5-year look at the retirement growth portfolio, that builds our confidence to know that even during the drawdowns, we're still going to manage, protect our net worth, and be ready for the next up move in the market. So we're up 11% versus the S&P 500 being down 3.5%. That's a 14.5% swing just since September. So just a great illustration in the real world. That's real world money and a real world portfolio. How you can transform your retirement portfolio by having the proper risk management plans in place. So that's how we do it here at VectorVest. I'd like to take just a minute or two more to invite you to our retirement portfolio transformation course. It's a step-by-step roadmap to a secure retirement. I just want to take a minute to walk through exactly what the retirement portfolio transformation course is all about. Again, it focuses on the 3Ps: profit, provide, and preserve. And the easiest way for me to do it is to walk through the modules or the lessons that are archived in the VectorVest University for those who join the course. It begins with the foundation builder. Okay, an extremely important part of building and managing and transforming your retirement portfolio is that you have specific goals and objectives in mind. Right? I like to use the quote that, we all may have goals and objectives, but if you have a goal and you don't have a plan, it's really just a wish, right? A goal without a plan is just a wish. So we want you to be able to create your vision statement and have those goals in place. Once we do that, we'll talk about the growth portfolio. We'll talk about the profit side, identifying the right stocks, finding the best candidates, and then managing them with the proper investment plan in place so that you can continue to grow them over time. We shift gears in Module 3 and we do the same thing for a dividend growth portfolio, right? For the provide side. We want to be able to generate steady income. Again, the VectorVest program makes it very easy to identify quality dividend stocks, finding those best candidates, and again, learning how to manage them once they're in your portfolio. Module 4 takes the provide side to part 2, if you will. Right? We talk about getting paid selling options, where you're able to generate income. Mostly we focus on selling covered calls. It's the most popular, the simplest option income trade there is. So simple and so popular that they allow you to do it in your IRA and your retirement portfolios. So you're able to generate income by selling covered calls. And we also talk about selling put options for profit as well for generating income. If you are new to options, don't worry. And sometimes that's even better if you are, because it allows us to build a foundation. I will show you how the trade works, when to implement the trade, and how to correctly set up and manage the trade once you're in that trade. And then finally, in module number 5, the portfolio insurance, we'll talk about buying put options as insurance on your portfolio. First, you need to know when to be defensive. You have to recognize those strategic times to be defensive. I'll show you how to protect individual stocks and your overall portfolio. But again, it's a very basic option trade. It's just an insurance policy. The same way you insure your car, your home, your health, your life, you can insure your retirement portfolio. And that transformation from being unprepared to prepared, as we know from November of this year to now, can be very, very helpful. The Retirement Portfolio Transformation course consists of not only the archived recordings of the modules and many other resources in the VectorVest University, you're also invited to 5 live mastery support sessions that I host where we actually implement the modules, the things in the modules that we've learned. Bonus number 2 are 5 weeks access to my members only group coaching sessions. Every Tuesday at 2 o'clock, the retirement coaching group meets and we go through the exact steps I just walked through to protect, build, manage your retirement portfolios, whether it's selling covered call trade recommendations or if it is recognizing strategic times to place our insurance or put options. We walk through that. You're invited to 5 of those during the life of the course. If you can't make the live sessions, don't worry. They are recorded and archived in the VectorVest University. The total value for all of that would roughly be about $4,300 for the course, the mastery, the coaching group. However, if you order before Monday at 5 p.m. Eastern Time, this coming Monday, we'll give you a bonus. The course will cost just $495. Go to www.vectorvest.com/transform where you can sign up for the course. Again, just at $495. That price is good until Monday at 5 p.m. They say there's no such thing as a risk-free trade, which is true when you hit the enter button, but that doesn't apply here because we're offering a 100% money-back guarantee. After the course is over, if you show you've done the work, come to the classes, watch the recordings, and you're still not satisfied, VectorVest will gladly give you a 100% refund. The question you have to ask yourself is, how much is it costing you not to do this? And the best illustration I can give, and it's the most recent one we're in, If you had the ability to protect your portfolio or have the proper risk management techniques in place during this current confirmed down, how would that have helped you? How much money might you have saved by mitigating those losses? Right? I could go back to 10 different sell-offs historically from 2000 to current, but I don't have to. I can talk about the one right now. If it would have saved you or mitigated losses of more than $495, then you have to ask yourself, right, again, what's it costing you not to do this? Right. So if it's more than $495, it's time to fix that and transform your portfolio. So once again, VectorVest.com/transform, $495, a great first step to retiring with peace of mind. So thank you for taking the time to join me, and I look forward to seeing you next time.